All right, so Robert, we're expecting lower volume. We're also seeing lower volatility. The VIX right now kind of at its lows of the year, despite the possibility of those tariffs being enacted. Surprised at all? We aren't seeing more anxiousness on Wall Street. The market's even churning to new highs after that announcement.
Yeah, there's been a lot of news and certainly a lot of uncertainty and cross currents on the policy front. Markets seem to have handled it well. I think that's a reasonable response, sort of looking through to next year, seeing a decent economic backdrop, a decent earnings backdrop. The only thing to perhaps be a little bit concerned about here is valuation, which sits at quite high levels. But other than that, the backdrop seems to be reasonably solid. So I'm not too surprised that markets are looking through some of the day-to-day noise.
You know, Robert, you seem to be literally the only person worried about the valuations. The markets just seem to churn higher pretty much no matter what happens. But we are seeing some areas of the market pull back a bit. We're also seeing some unwinding of the Trump trade. What do you make of just the Trump trade overall, whether it be small caps, Bitcoin? Do you see it having more legs, just continuing even beyond the holiday?
Well, I think we could be in a bit of a period of consolidation here. Stocks need to grow into their valuations a little bit. We've digested a lot of news that markets have generally interpreted in a favorable manner. I don't disagree with that interpretation. But in terms of new catalysts, we're sort of lacking for them over the next few months. It will be some time until these policies are implemented. We're also in between earnings seasons, and I see the Fed continuing to move very slowly. So there's sort of no new good news on the horizon. So I expect just a little bit of consolidation here, a little bit of time to grow into these valuations.
So you said there's no good news on the horizon. What about the news we got yesterday, or at least the Fed minutes we got yesterday? What was your interpretation? I also want to get your take on what BlackRock had to say about those Fed minutes. BlackRock putting out a statement saying that right now fixed income looks more attractive. And they also went on to say, we expect the Fed to bring rates down to around 4% in the coming meetings and then pause or move to a quarterly pace of cuts depending on how the inflation and data growth evolve, the growth data evolve, I should say. What's your take on that? Do you see one more cut and then there's a possible pause, or there's just a change in the cycle there?
I think they're going to be very data dependent. And as you alluded to earlier with the upcoming inflation report, inflation's been pretty slow to come down. It's heading in the right direction, and that's why the Fed's been able to begin these cuts. But I do think they'll be slow and deliberate. So it's quite possible that they move 25 here and then pause. If inflation pauses, they'll pause. And so it will take some time. I think looking through that and looking further ahead, fixed income does look pretty attractive here. And you will have inflation coming down and you will have rates coming down. Just have to be a bit patient for that to unfold.
You know, speaking of PCE, I actually wrote a story on CNBC Pro talking to some traders, portfolio managers, financial advisors about how to play PCE, if it's hot or if it's cold, either way. If you don't mind, I'd like to bounce some of these ideas off of you right now. The cooler than expected PCE play, some of the names we got were NVIDIA, US Bank Corp, Goldman Sachs. And on the other side, if it's hotter than expected, Amazon, TJX. I mean, your view, are there plays to make ahead of this report if you think it's going to be hot or cold?
Well, I think if it continues to be hot, that implies that rates will stay a bit higher for longer. And I think the playbook that we've had in place is the one that will continue, which tends towards large cap. It tends towards technology and companies that can control their own destiny through organic revenue growth and profit expansion. And so you have to not rely on the valuation side of the equation, but rather the earnings side. And if the number comes in a bit cooler, perhaps that leads to expectations that the Fed might be able to ease a bit more, and you'll see some acceleration of that move into small caps. We've seen that in the past. Anytime you get a whiff of good news on the inflation front, small caps seem to rally from there, and so you could get that same scenario again here.